Hello traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York on Wednesday, April 27th, 2016, and this is the Daily Report for Gold and Silver. Fed FOMC meeting did conclude today. Wednesday, comments came out. They're still dissecting the comments, but in essence, interest rates, at least for now, are going to be left alone, and even the June hike is in question. Tepid response from the precious metals along with the equities markets, both trading higher on the day, but both trading higher in very low numbers. First to gold, 1248, putting it up about $5 on the day, but take a look at the range, 1240.70 on the low side, 1254.60 on the high side. So we had a very, very tepid range for a Fed comment day, so to speak. Now, silver did bear a little bit better when you consider gold was up 0.39%, almost 0.4% in terms of its net gain. Silver, on the other hand, is up about 0.6% at 1724, putting it up about 10 cents on the day. The low 1707 and the high 1741. So a little bit more of a range and a little bit more action in silver. We are long both gold and silver. We'll talk about both all on today's Daily Report. Interesting day as we digest statements made by the Fed. And as we've been talking about for quite some time, true to our expectations, the Fed held rates and sounded a few caution notes about the U.S. economy for the short term. And when we take a look at the net effect that we have seen in the precious metals markets, and we are looking at a daily chart, really what we can see is, if anything, this statement and the fact that interest rates are going to hold steady, at least in my opinion and the opinion of many other analysts, was absolutely factored into the market prior to any kind of an announcement being made. And I think that is why, as the announcement came out this morning, we had such a tepid move, both in equities trading higher, precious metals trading higher, but not by a whole lot. Now, on a technical basis, we certainly saw this market break above former resistance. And the only thing that I can say is that we didn't get the kind of a close that I would have liked to have seen, and much stronger, and close near the highs. Of course, we had these highs up at around 52 and 53. A star to me is not what I really wanted to see on a breakout line, meaning as the market actually trades above this particular resistance line here, you really want to see a strong breakout, and the kind of move that you're really looking to see would be predicated by more of a large green line than a doji. I'm going to try and color that in real quickly, but it would have looked something more like this. In other words, we would have seen a clear and decisive breakout as we saw here, even though there wasn't really any follow through. So traders, when we look at the bigger picture, and that's what I have just done, in fact, what we can do is convert this daily into a weekly, and then what we'll see is the ability really to blow this up a little bit better. But I truly believe that we are right at the tail end of the conclusion of this wave 2, and that's following a tremendous upside rally, which really took gold off of these lows at 1050 up to about 1288. Market then comes down 38% retracement. It doesn't come down precisely because, in fact, what we do get is this compression triangle, and I still believe that we'll see a break to get us to a third wave scenario, and then that third wave scenario I also believe will take us above 1,300 per ounce. So traders, a nice showing for silver, up about 0.6%. And we talked about this a little bit yesterday, and that is, one, with silver, you do have a much thinner market, less liquidity, less volume and open interest, so to speak. And we had these 3 days in which the market absolutely consolidated. You had this triple doji, and these dojis, as I've said many, many times, can either be alluding to a consolidation before returning to a prior trend, but it also can signal some potential pivot point. In this case, we did get a consolidation. We're now trading well above the range that we saw within this particular market area, meaning just below 17. We got that nice pop up. We still need to take out 1760, and this is really where I'm putting our current resistance at, which is 1760 in silver. And traders, you can really get more of a sense once we convert our daily to a weekly, because it takes away some of that thinness, so to speak, in the market. When we do that, you can see that this week has been a nice solid move up. We're at Wednesday right now. If we finish on this high note, I would expect at least to flirt with this 1760 through the end of the week. That is our first real level that we need to really overcome, and you can see that top right here. Above that, though, you really don't have any major resistance till about 1840, 1850. And of course, that's based on these tops here. Those came in, of course, February of 2015. Traders, maintain your current long position as well as your stop in both gold and silver. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.